months. So they disburse some monies. And if we take the IMF program is coming to an end this month, and this is the ninth and final review. So there are some fiscal targets, there's structural benchmarks. So, but if you take a step back to the seventh review, which was last year, it was started in April, and then by July should have been completed, and then the riots came, so they postponed it, and then eventually they combined with the eighth review. But the outturn with the ninth review, so ninth review basically is assessing, as of end of December, fiscal targets, structural benchmarks. It has the government of Kenya, or Kenya, we have not performed satisfactorily. So that speaks to a tough ninth review, and there's a possibility that even we may not get funding. If you look at the budget policy statement that was tabled in Parliament, I understand that there are two versions. One was tabled in Parliament, and that speaks to no disbursement with the ninth review, which is basically what most people are now starting to come to terms that there is a possibility we may not get a funding based on not meeting the fiscal targets and also delay in structural benchmarks. By structural benchmarks, I mean some of these conditions from the IMF that we need to adhere to, parasitical reforms, some things like that, we've not been able to meet. So that speaks to that. And then based on that, the idea of what will be the successor program be, I tend to disagree with Femulele's assessment that we really need a finance program. We may have what you call a precautionary facility, which we had in the years 2018, 2019, whereby we had like $1.5 billion packed somewhere. In the event that there are some shocks, we cannot be able to tap into that. Or we can have what you call a non-finance program, whereby we don't get monies from the IMF, but we can get what you call technical assistance from the IMF, that at least to ensure that there's some reform continuity in all this fiscal consolidation that Kenya needs to adhere to. So those are some of my views around the fiscal.
Thank you, Churchill. On that technical assistance and the risk that you've mentioned, as we digest the fact that, which I've not checked, that we have had two supplementary budgets presented, let me move this to Stella and ask, what risks do clients need to keep in mind as they navigate the evolving landscape? And this speaks to both FX and interest rates.
Thanks, George. So let me start off with the foreign exchange risk. If you think about foreign exchange risk, the three main aspects of it are, one, translation risk. And translation risk is as a result of the time when you transact and when you settle. So for example, you're seated here, you're an importer, you import materials or let me call them inputs. By the time they come to Kenya, you sell in local currency, but you need to make payment in foreign currency. That time lag, I heard Mariam speaking about LC, 90 days, 180 days. That is what is called translation risk. And that's a big one, and we've started seeing it a lot. The second one is called economic risk. Sometimes people call it focus risk. And what that means is basically is as a result of events in the macro, which sometimes we may not have control of. Especially right now, the geopolitical environment, I think, is a space where we can't underscore. And then obviously, some of the changes we can see in the regulation, I think those also do come and impact what happens to the currency market. The last one is what we call translation, more of around, if you have subsidiaries outside of your border, where you report in foreign currency and you need to report back into home currency, that element of valuing that positions of your company could have an impact in terms of foreign exchange risk. And I think those broadly are the main ones in the foreign exchange market. I don't know that you want me to cover what solutions we have, maybe as I cover that together with the interest rate. Yeah. So from a solutioning point of view, we broke it up, and I'm not going to go into details because she spent a little bit of time. But she spoke about the 4 quadrants in terms of how do you manage that FX risk. Obviously, the first one is your traditional forward exchange contracts, We call it is the basic hedging product that you can have in the market. Spoke about the interest rate differential, and you're purely just playing around with a carry, where you deposit, where you loan your local currency at. So those interest rate differential, what we normally call as carry, is what you're basically paying from where the rate is today. And then you move closer to what we call the purchased options. She spoke about the call options as one on the input side, where it's just an insurance product, just the same way you insure your car, you buy protection, you can sleep sound, and you can now do your business and know you have some cover to take care of the FX. And then the third one is what we call the reduced premium strategies. So remember the purchase options, you have to pay an insurance fee, right? Which is basically your option value. But then the reduced premium strategies, where she was talking about combining forwards and options to give you something that has what we call a bit of participation, but also has a bit of protection level. And those typically don't come at any premium, and what we call them zero premium structures. They're quite good. They help you manage the risk, and you don't have enough outlay to pay for that, then you can utilize that. Then the last one is a cross-currency swap that we spoke about, especially for yourselves who are seated here. Because I've had these conversations with clients say, oh, now, especially last year when rates were elevated, everybody was saying, I think it's better to borrow in foreign currency, in dollars. It's much cheaper, right? Yes, it is. But then you haven't factored that you have a mismatch. Your receivables are in local currency, but then you're borrowing in an alternative currency. So essentially then the cross-currency structure becomes a darling. And to be honest, sometimes I sit with clients and I wonder, that's sort of like a natural product. Because for one, if you have a loan that goes for either 1 year to 5 years, you're getting an exchange rate today. Your exchange rate doesn't change. If the market today is at 129, we'll fix your cross-currency swap at 129. In 5 years to come, you're still going to have it at 129. So your $1 million today becomes 129 million shillings. In 5 years, you're still just going to pay as 1 million, and you receive back, your 129. So it's 1-to-1. There is no risk. The only thing you have to do is you're going to have to pay as a premium, or rather an interest, and then we'll pay you interest on the other currency. So it's an interest-based play. So I think that's fantastic. I think the other one you asked me is around the interest rate. So the interest rate has a couple of connotations, some more touching around the funding, some touching around your investment. So I think the very first one is the yield curve risk, because we've seen how the yield curve has performed, and I'm speaking here to the local currency yield curve. On the short end of the curve, between 91 days to about 2 years period, we've seen that curve has been sort of elevated, a bit steep, that's what we call it. And then in the 2 to 5 year space, and that was last year, we had higher rates, more than where the rates in the 5 and longer end of the curve was. And that's what we used to call hump. So you could hear financial markets, people saying, oh, there's a hump. A hump is basically the yield curve has a hump on top of it. And then beyond 5 years, the curve was actually very flat. So that effect of the yield curve has an impact if you have borrowings that you have not hedged. And one of the things we're trying to do is we're going to be very soon into the market helping clients not only hedge their foreign currency interest rate exposure, but more importantly, start to hedge clients like yourselves who borrowed in local currency, but you're pegging your facility on what we call the T-bill, not the bank reference rates, as you typically find in commercial banks. So if today you have a loan that's linked to a T-bill, I would actually recommend you look at a hedging strategy because of where the interest rates have fallen. I think Vimal has said, come from almost 18 to about 10%. We look like we could potentially bottom out. Potentially there's another cut in terms of easing, but I think the TBs where they are between that 8.5 to 10, I think there's still a window for one to take advantage and try and see how they can hedge. I think the other one is basis risks, and we see it a lot in terms of companies here. You have an asset that references an interest rate index that's very different from your liability. And what that means, then you have a basis risk. And you've got to ensure that you almost match or hedge out any basis differentials you have between your assets and liability. The third one, again, is refinancing risk, which is a big one, and we saw it last year. especially for clients who are borrowing on the short end of the curve, or what we call the working capital cycles, because those typically tend to be very short end. You're coming in for a working capital cycle for maybe 90 days. The risk of that is if you're in an elevated interest rate environment, then before you come to getting into your next cycle, the rate has moved. So that refinancing risk is actually real. And then on the inverse, if you have deposits that you're looking to place with the banks, and then rates are now in a declining fashion, what we are seeing today, then you have what we call a reinvestment risk. And I guess that's what most companies are facing. Now you want to place money, you don't know where to place it, rates have just collapsed. So I think those are some of the interest rate risks we see. We do have solutions both on the yield enhancement solution. So from your vanilla deposit in the bank, we've been able, and we have a session tomorrow with majority of what we call non-bank financial institutions. And what we've been able to put is an array of solutions to help you navigate these investment options. And some of them very high level is you could have a structure where you don't want to go and face into the market to buy any sovereign risk, be it, let's say you want to buy Kenyan Eurobond, you want to buy the Ghana Eurobond, and you don't have access to what we call the Euroclear. You can come to us as a bank and we can give you into terms of a note program. So we've created a note program whereby we get the deposit that you're holding in dollars. We buy what we call a credit default swap. So we're buying insurance against default of the underlying, and then we package it into what we're calling a credit-linked deposit or credit-linked note. So please feel free to talk to us. I think there's an array of solutions out there. Actually, recently we just priced one where if you look at the yield curve on the local currency, that same solution we converted using the cross-currency swap you saw here to get into what we call a localized Eurobond. We are seeing those rates are potentially 200, 300 basis points where the yield curve is. So a 5-year right now on the yield curve will pay you potentially 13, 14%. That same structure is paying you about 16, 17% from a return perspective. So again, a great kinker, but then there is obviously some embedded derivative. So I think let me stop there. I'm quite passionate about that. Yeah?
Sure.
Thanks.
Clearly, thank you. Thanks, Stella, for that. So in a nutshell, we're just saying, and not really referencing a football team, but don't walk alone in this FX interest space. We'll be happy to be with you. We'll be happy to curate these in your boardrooms, happy to visit and unpack this further. I'll take a round of questions. Just after I asked Dr. Vimal a question, for those who are following us online on our social media pages, that is on the LinkedIn page, the YouTube page, please drop your query. We'll be happy to respond to it. And our hashtag still continues, invested in your story and APSA Insights. So I'll just ask one, and then we take 2 or 3 questions. I'll seek your indulgence for maybe 10 more minutes, because I'll have to invite corporate director to give closing remarks, and then we shall have lunch. But this is just to Dr. Vimal. I caught something, that you are in an expansionary phase when many entities are contracting. And I thought that is interesting. So maybe just from a sustainability basis, speaking from your many years of experience at Bitco Africa, so that, let me use my name and be vulnerable here, so that my entity called Njoroge and Sons becomes Njoroge Africa. So from that basis, looking at long-term growth, looking at long-term sustainability, what will be your 2 or 3 nuggets to the business community gathered here this morning?
Thank you, George. I think it's not a secret, but it's a strategy that says, we call it to grab, grow, and sustain #1 market share in the African markets by 2030. That's one of our goals that we set up for the company. And therefore, we're in FMCG. We focus very clearly in that sector. We're not getting into banking. We're not getting into other things. I think that's important. Number 2, the consumer out there, we have consumers. The consumer will still keep on consuming. They will not stop consuming. The question is, what are they consuming, and where is that consumption coming from? Is it coming from overseas, or is it coming from local manufacturing? And therefore, the key issue here for us is to be competitive. Competitive in local value addition. That's what our game plan is. And that's why we're on an expansion mode to say, fine, we're looking for locally value-added products where we can add value to local products and really be competitive in the East African market. That's why we're on expansions right now, because we're now free from banks, so we don't have to worry about bank borrowings and the interest rates. So it becomes interesting out there to say without interest is more interesting. The covenants that you face, the bank questions you face, they've never run businesses, but they want to run your business for you, right? With due respect to bankers, sorry. But it's an issue. If you're an importer, you realize you're going to import something, you're going to bring the product, you're going to sell it. Say, I've got a sale. No, I can't finance that. Stop. So there's a lot of those restrictions. And I think this is where we've experienced freedom, and now we're saying, let's go on to it. So with that, I just want to say that the consumer in East Africa is not going to stop consuming. They're going to be consuming. We are on a growth path because our demographics is good. In fact, let me tell you the contrary. China is having a problem with demographics. Their population is not growing, and therefore, they're going to run out of demand soon. So I'm just saying the demand-supply equation for us here in Africa or in Kenya or in East Africa is good. Let's take advantage of that. That's what we're looking for. Now, you've got to wear the specs of opportunity, not one of saying doom. I'll put it a different way, right? We're probably sitting here in Kenya at this time, on this day, right? 4th of March. What's wrong with the economy? The interest rates are down. The FX availability, 3 years ago, 2 years ago, we were struggling. We would call this bank and they say, we got nothing, we got no money. A bank says we don't have any money. So you would struggle for all your FX and all those issues, all gone. Today they'll say any amount. Tell us what amount you want. Give us the shillings, we give you the dollars, right? Number 2, Kenya is in a situation where you can go to the bank and say, I got 1.2 billion shillings, give me $10 million. Same day they'll give you the dollars. It's never been there before. I mean, this is where in East Africa, in other countries, you can't get this. So we are sitting in a good situation. Only problem, and I say this only problem, I hope I'm not being quoted everywhere, it's the government and its actions and the way it is now doing things in the country. I think we talked about spending and spending or whatever. If that was sorted out, if that issue was sorted out, do you think people will stop consuming? If that is not sorted out, do you think people will stop consuming? No. So I'm just saying, when you look at that angle, there will be consumption. The question is competitiveness. And I say it again, I said it earlier, I'm repeating myself. For every one of us here, it's competitiveness, right? So I was just looking at another product, Stella. I don't know if you have this product. If you're an importer, how many of you are importers here? All of us are, right? So if you're importing anything, if you could get you're importing in dollars or in whatever foreign currency, and Stella would give you a product that says you've got to pay in shillings, and you've got a credit facility of 6 months, and you pay in installments over 6 months in shillings. They will do the hedging, and they'll charge you a cost for it. I think you can do that product, right? They can give you a product where you say, you pay in shillings, you're buying in foreign currency, but from now on pay in shillings, or the next 6 months it's a deferred LC or whatever, and in local currency. I'm sure you can do that product. It'll just cost, and that's an insurance premium. So we all pay insurance. If I die today, I've got insurance premium that I've paid. This is an insurance. So I'm just looking at it from that angle and saying, this is a good time to be in. Interest rates have dropped. I hope they sustain. I hope you're not going to go back and say, now there are other charges. There are this charges and book charges and ledger charges, and I don't know what you come up with. Ultimately, to hike it all up. Number two, I say one thing, as importers sitting on the other side, bankers are in trouble. They've got a lot of money. They don't know what to do with it because they can't lend it at high rates. They can't put it into treasury bills anymore at high rates. They're all gone to 9%. So really, they have to lend. Now, they may lend to other institutions overseas or wherever, but I think Kenyans, all in business people here, probably in the good books if we can look at it from an angle. Make sure our businesses are risk-free or not risk-free, that mitigated risks, and also present ourselves properly. And really, whether it's banks or equity financiers, there's about 10 or 15 different private equity funds sitting in Nairobi. They can't get deals. They don't know what to buy. Of course, there are 20 others who say, I don't know how to sell because they can't exit also. So there's two different problems there. but you can find solutions around it. Therefore, I'm just saying, you've got to wear these specs of opportunity to say, fine, I see the opportunity, I see the things happening here, because come what may, any government in power, consumption is not going to stop.
Great nuggets, right? Thank you. A round of applause to Dr. Vimal and the panel. Thank you very much. And as you wear those specs of opportunity, remember, we invested in those stories and we'll be happy to dovetail in those conversations. So I'll just like to pause there, and I see your hand already. Take 2-3 questions. You'll indulge me, right? You will indulge me to take a few questions. Thank you very much. So I know the mic will move around. The pool of wisdom is here. Let's listen in. Take like 3 questions and then take another round. Thank you.
Okay. Thank you. My question is to Dr. Vimal Shah, and in the spirit of making a difference, and if you were to be taken back to 1970s when you started Bidco, and I noticed that your niche is in essentials, meaning you will always be in business, and also going to the export market, which is what Kenyans we need to do to sort our economic challenges. So from my observation, Kenyans are entrepreneurial, but the thing is conceptualization of the idea, because you find an M-Pesa shop and everyone opens an M-Pesa shop. How do we think around it as a business owner who's been in the journey, especially around conceptualization of business and getting it correct, notwithstanding the challenges that come with government and whatnot? So first, getting the idea right.
Thank you. We can take 2 more, and please remember to introduce yourself, even as you do the question. Then Hugh will take that.
Thank you. Okay. My question is actually to the bankers, as Dr. Vimal has been speaking, and rightfully, because not with ABSA, another bank, and they came to us that we can offer you this, we can offer you that. I said, okay, we can give it a try. So there was no risk, that's what I'll say, because there was a firm liquid security. And the first question that came is, how comes your revenue projections are not good? So I looked at it and I said, look at the 3 years audited accounts. Look at where my debt was. Look at it where it is right now. So the specs need to change. Let's go with contact lenses, because that's where the risk is.
Thank you very much. Maybe you can take 1 more. And that is good feedback to Steve and team, and I know he's taking that. He'll be here in stage. Thank you. Name, please, and then the query.
Good morning, everyone. My name is Sharon from Better Healthcare. My question is to Vimal Shah on the management of credit risk. If, let's say, you're a manufacturing company and you're dealing with, let's say, 15 customers or 20 customers, let's say 15 local, 5 export, and you know your customers well. However, is it safe to have such a lean customer base, or are you safer extending or spreading the risk to have, like, let's say 50 distributors as opposed to 20 to manage the credit risk? Because you also don't want to get to a point where you're overstocking a distributor because you need the sales, but you want to spread your risk. So maybe from how you have managed Bidco, what would you advise would be the best way to manage the credit risk? And then probably, as much as you want to keep your head above water, yes, you can keep your head above water, but there comes a time where, as the macroeconomic factors are changing, the government policies are changing, the taxes, it gets to a point where you have to now be innovative and think outside the box for your company to grow. So what was the turning point for Bidco? Like, at what point did you guys grow? Was it out of marketing? Was it out of the strategies that you guys were employing in management? What was the turning point for Bidco?
Thank you. 2 questions and 1 feedback. 1 feedback for the bankers. I believe Steve will address that. And then two queries. One about the conceptualization, which we got from here. I didn't get your name. And Naomi SKF, and then credit risk with respect to growth from Sharon, Better Healthcare. Both to you.
Okay, thank you very much. I'm getting all the attention. So, thank you, Naomi. I think your question is more about the entrepreneurial spirit. I can tell you one thing, with due respect to anybody who's non-Kenyan, Kenya has the best human capital. Kenya's got the entrepreneurial spirit, we've got the real spirit within us, and I think we're entrepreneurial in that manner. So therefore, I think to nurture it, we need to look at it from a different angle and say, fine, how do we do what we do, right? Which sector do I want to be in? Where do I want to play, right? Whether it's banking, insurance, this, that, product, or importation, what is it that makes me competitive? Now, if you're an importer, and a lot of importers here, find out. First and foremost, you ask the question, how do we identify opportunities? My answer to you would be, look at your table, look at your dining table, look at anywhere you go in the shops. Find out which are the products that are locally made and which are imported. Anything that you're buying in your shopping basket, 100% of products you buy, which ones are imported and from where? What makes them competitive compared to what we would do here? That's the first step to start with, right? And therefore, you find out, is it competitiveness of taxation? Is it VAT? Is it this? Or is it just cost of production? Which product can I make here or produce here or get processed here and would be competitive in? Now, one more factor that Kenya, we've not had this, is called white labeling. Do you know what white labeling is? You can get your Naomi brand of products made by some other manufacturer in Kenya, and you can start selling it too, okay? You do contract manufacturing with somebody. Everybody who's got excess capacity needs to be able to say, fine, I've got excess capacity, I'm running at 20%, 30%, can I produce for somebody else? And therefore, you get it at nominal cost rather than marginal cost, not nominal cost. At marginal cost, whereby not everything is added on to you. You get it? So there's many ways of doing this. Again, you've got to get your branding and marketing right. A bit of your question will be answered in the same manner. What is my market? Whom am I targeting? What are they consuming right now? How are they consuming? What's the frequency? What do I offer that's different? Or am I a me too? The classic case here is the wildebeest migration in the Masai Mara. That's a me too herd instinct. If some guys go and break up, then the rest just follow blindly. Of course, some become lunch, but the crocodiles are always there. But then they all cross through. So don't have this herd instinct, because in Kenya we have this herd instinct that if she's opened an M-Pesa shop, I should also do the same thing. If he's opened a car wash, I should do the car wash, or a petrol station. I think that's where we've gone wrong. We've got to look at it and say, out of the box, what else can I do? What can I do differently? And then, of course, do some research. 90% planning and then 10% execution. Really, I think even bankers would help you in strategy in terms of what to do, what not to do. And there are many consultants also available. I think also, Churchill, are you a consultant? No, not yet. But there could be many consultants, and you could also speak to people in the industry, say, fine, what should I do, what should I not do? And don't be scared to talk to people in the sector you're looking at, and just have a discussion. What do you think? Where do you think? And ask them, where do you think you went wrong? What do you think you should have done differently? A big test case is right now, go to any company that is falling down or whatever, ask them, what can be done differently here? You'll be surprised, there's so many companies up for sale right now. You get a lot more. And you ask them, what made you fail? What didn't work? What could I do better? You just learn for yourself. I hope I answered your question. Beta Healthcare. Credit, and I think trading and over-trading, and also in terms of how to do marketing and how to do selling, without a market out there. So it depends on which sector you choose to be in. If I choose to be in a sector which has got no brands, I don't have to do marketing, right? I'm doing generic products. Example, if you're in pharma, you're in pharma, right? So if you're in pharma and you're just selling paracetamol as paracetamol, and there's no brand to it, right? You're now playing in the commodity market. There it's all going to be about price, price, price. And therefore, your distribution channels you will choose there is general trade or modern trade or chemists, which are just wholesale selling. You won't have a mass market. If you're branded and say, now my brand is called Beta, I hope it's Beta, I don't know. If it's whatever brand you put in, X or whatever, you put it out there and then you want to do marketing. The marketing will be done to the consumers. That's where the pull comes from. Now, your distribution strategy should be, where do I need to be? In supermarkets, which is what we call modern trade, or in general trade, which is all the markets right below supermarkets, right? All across the country. Now, if you want that spread there, you may not have the resources to go directly to every one of them, because you're going to give credit to every one of them. Managing that credit is difficult. You'd rather go through some distributors who are established there, who've got a range of products, and work through them and get that distributed across the country, if that's what your goal is, right? And then again, the credit risk. Let me ask you a question. When you go to a supermarket, do they give you 60 days credit? How many days credit do they give you? None? Now, look at that. The consumer is paying cash for the product. Where is that money going then? It's sitting with the supermarket. The supermarket, sorry, they must be the biggest depositors with these guys. They're sitting with a lot of money every day because they convert it into cash. That cash sits in banks, earning them interest, and then they pay you after 60, 90, 120 days. Do you see that? So it's the cycle that comes in there. Now, if you're in a commodity market where your margins are very thin, I would rather say look at it going direct to those consumers and saying, fine, how do I get that money in? You have to look at your channels differently. So again, it depends on where you're playing, what you're playing in, and get it right. It's a long strategy, but I can discuss that all day with you. However, when we started off by coming and saying, fine, here we are. I was in university and we said, okay, we want to create soap. So I wanted to create the whole value chain of what Unilever was doing. And we went to the banks. In fact, all these bankers, we went to them. They said, no. Young lad, you just come out of university. Do you have any experience? No. Have you done this before? No. Oh, we can't give you money. So you start small, aim big, and then at the same time, keep going backward. That's what we did. We started making soap. We borrowed from friends and family, started put up a small soap plant, and then went around and said, now we're making good soap. We competed with Unilever because they were making blue soap. We make it white soap. We go to the markets and the shopkeepers say, oh, we've got a blue board here called EAI distributor. I don't know if you know this, but in those back days, if you were old enough as me, there was an EAI distributor and they wouldn't buy anybody else's stock or product. So we had to create a whole distribution channel. So it's a long story, but I can just tell you that it's all depends on how you want to be, where you want to be, determine that. So the goal is important. Like we have a goal right now, you can check it on my website. It's there. It's to grab, grow, sustain #1 market share in African markets by 2030. We still have that goal, and that's what's driving everything that we do. So you must have a goal, you must have a strategy, and you must know where to play in. A lot of people have this problem. Once they make a bit of money, then they say, now I can do anything. I can buy a hotel, I can buy an airline, I can buy whatever, and then they spread themselves so thin, they are jack of all trades but master of none. So I would just suggest that whatever space you pick up and say, fine, here, master that, become world-class in that, and in Kenya, you can be world-class. World-class doesn't mean that it's got to be only an Apple or a Toyota or whatever. You can also be world-class, and really adapt those practices. It's not rocket science. Thank you.
Thank you very much, Vimal. I really appreciate, right? Thank you for that masterclass. But we really have to go. So I'll just take half a minute closing comments, half a minute really, literally, from Dr. Mark. Maybe you can start with you, and then Churchill, Dr. Mark, and then Stella. And then I'll come back with Vimal with one last one. Thank you.
All right, thank you, George. I think this has been, and I think all of you will agree, very insightful, very impactful. Some good lessons to take away with us. Despite, I like what Vimal says again about putting on the specs of opportunity. In the midst of the quote-unquote turmoil, I think that for me is what I take out of this, is to always look at things as glass half full, not always half empty. So again, thank you very much again for the invitation, and I look forward to more sessions like this. Thank you.
Thank you, Dr. Mark. Yes, Churchill.
Thank you, George. It was a wonderful session. Learned a lot also from my fellow panelists, and I hope that you too have learned a lot from us. Looking forward to the next session. Thanks.
Thank you, Churchill. Stella?
Thanks once again, just to say thank you to everybody for taking time to be with us today. I'll end with a quote that I love, and it's actually printed on in my office. It's by George Soros. He says, markets are always constantly changing and in a state of a flux. You make money by discounting the obvious and betting on the big stuff. So reach out to us. We want to help you. Thank you.
Thank you very much. Dr. Vimal, I'll give you a minute just to say this. I promised I'll ask him this question. Part of business sustainability is ensuring that you as a business owner, a business person, live as long as, to the extent and the length that God will allow you. So for those who have known Vimal, you may have noticed he has recalibrated himself over the last couple of years. So I said he will share a nugget just for us to go and ponder about. Maybe not fully, but maybe in a minute, Dr. Vimal, what will you speak about that?
George had asked me to say something. But I think the issue is if you are yourself not happy, not healthy, and not living a life that you want to live, then you cannot do anything in life. So I think what I was sharing with him was, he asked me, how do you become trim and all that stuff? Every day morning, early morning, yoga, breathing, eating right, mindfulness of what you eat and what you don't eat, and really limiting yourself in a good way. But if you have to have a big meal or whatever, have it, the next day you can balance off. So that way you just make sure, maintain your health. And if you maintain your own health, with also meditation included, you have a stable mind and you can go ahead. For me, like my sell-by date is already over. I'm 64 now. So it's like way past, best before. But really, it's not difficult. In our products, we have a best before date, right? Sell by date. So, but the point is, you can do lifelong learning and learn all the time. And really, once you're really strong about that, you will then infuse a lot more people and really take care of your own health, because that is going to be important.
Thank you very much. Ladies and gentlemen, help me appreciate the panel, even as they take their seats. Thank you very much. Thank you. Yeah, we can celebrate them again even as they get down. Thank you very much. We could listen to them all day. So thank you. So to close it up, and I know I'm standing in between you and the lunch break. So to really close it up, is one of our directors. He takes care of coverage. He will unpack what coverage literally means. And I know he'll have a moment, so just give him a few moments to close for us. So help me bring on stage Steve Biko to give us the closing remarks. And I know we shall be good after that. Thank you, Steve.
Yeah, thank you, George. It's been a very busy morning, isn't it? And the panelists have done a good job. I do believe I've got contact lenses. So let's start there. But I think we'll get to that point. So my name is Steve Biko. I look after coverage. So basically all the business sectors within corporate and investment bank. We do work with a few colleagues in the product space. Lydia takes care of transaction banking. Then we do have markets under Stella. And of course, we do have investment banking under Dan Odongo. Dan is not here. I just want to cover a couple of points in terms of the evolution of our business. And I think it's important so that we just see how this dovetails together. More importantly, I think from investment banking perspective, there are new things that are happening there. So today we do have M&A desk. That's a new desk that started off. I think to Vimal's point about private equity around the space and trying to look at buy-side, sell-side opportunities. So we do have a resource looking after East Africa for M&A sitting out of Nairobi. I also need to mention that we do have a debt capital markets desk as well out of Nairobi. So whether you're looking at DCM opportunities or equity markets as well, we do have that capacity based out of here in our head office. There are many things that I wanted to, I know there was a question that was raised in terms of our support for corporates. I think it was raised by the lady seated close to Mariam there. And I just want to say we've done a lot of things in terms of support of our customers. So when it speaks to restructures, our ability to have discussions with your particular institution so that we come up with solutions that are basically geared towards supporting you. I think we've done that. More important than not, I think many customers, they always they tend to believe that probably it's more money that resolves the problems. But there are many things that we need to have a see-through to just understand how we navigate this particular journey. I think things top of mind, commodity price, evolution of commodity prices becomes very critical in terms of our support to businesses, interest rates, your operating, your OPEX structures, and how you look at that, and predominantly FX as well. So these are 4 buckets that if you look into, have a direct impact on your bottom line, on your sustainability. As a business, you want to be sustainable, you want to grow, and of course, you also want to have a very good pulse in terms of compliance with the regulators. So we are very happy to do that. We are also looking at overlapping our business segments also with sector expertise. So within our group structure, we do have sector expertise. So whether you're looking at oil and gas, you're looking at diversified sectors, public sector, etc. We do have that expertise within the bank, and if there's need, we can always figure out and have those in-depth conversations. The regional interplay, I think, is very important. One of my colleagues did mention that we do have presence in 10 African markets. We do have 2 in non-present countries, non-presence markets that are exciting for us. We've done transactions in Senegal. We've done transactions in Angola. We are looking at DRC closely. Ethiopia is just close by. So if you've got any interest in those markets that you want us to look at, then as ABSA Group, I think we can be able to look at those closely. So let me close in by thanking the Global Markets team for setting this up together. I know Davis was here with his Kahoot play, but it didn't take off. But Davis, thank you also as well. A good thought on that. Let me also thank Kempinski as well for hosting us. And of course, you, our customers, for spending half a day with us today. Thank you very much.
Thank you very much, Steve. So, Stella, I'll invite you back for a moment. Please take a moment to give us feedback, helpful feedback for the sake of those future conversations we shall have next year. You can scan the QR code. Just come on stage so that we do appreciate the panelists together. And I'll request Dr. Mark to come on stage. Charity, if you may, you can assist me on that. And thank you. Even as you take a moment just to give us feedback on this using the QR code. Thank you. Let's celebrate them. Tamak, thank you. Churchill. I see economist Churchill Ogutu. Thank you very much. And lastly, Dr. Vimal, if you may. Thank you. It's a small way of saying a big thank you. Yeah. His feet. Thank you. Thank you, Dr. Thank you very much. Great. So it's been a great pleasure being your MC today. Thank you very much for giving us slightly more than 20 minutes of your half a day. We are truly grateful. And we do believe that from this we shall be able to build conversations that will straddle across to your businesses, and we shall be able to give you more value even as we continue to interact from across all the products, across all the conversations that we are having on FX, interest rates, coverage, credit, all the opportunities that you give us to interlock. We really don't take that for granted. So allow me to pause there, salute you, appreciate you. One more to our Muslim brothers. I noticed some what do you tell them? Ramadan Kareem. So thank you very much. It's been a great pleasure. Have a great afternoon and rest of night. Thank you very much.